Hello and welcome to today's live stream with me, No FOMO Charts. It is April 3rd, 2022. It's just about 1:30 p.m. Eastern Standard Time here on a Sunday. And today's format is going to be a little bit different. We're going to do about a half hour of stocks and crypto, but we're just going to be focusing on the majors, meaning the top 10 largest stocks and then the top 10 largest cryptos with the indexes in the beginning of each. Let's go ahead and get started. So we're going to start off with stocks first because quite an overextended move. We'll start off with the DIA, the Dow Jones Industrial Average ETF. Okay, so what happened? What happened? Might have to rechart this. But the latest move we had off of our fear lows in the market was essentially this triangle of the candle, the symmetrical triangle. Kind of a tricky pattern, but about 6%. We ended up going just about 6% to the top of this move in the DIA, Dow Jones Industrial Average. Also, if we draw some trend lines, we can see that the upper trend line, like I was trying to say in my Discord for a while now, was tested right here at the top of this resistance trend line. There was a little intraday possible resistance. It broke out because of other company specific news. We should note that in particular, there are several stocks and companies that are announced. They are announcing their stock splits. Okay, so which ones come to mind? Tesla, Amazon, etc. Those are the two big ones. So this particular actual last move was essentially perpetuated by Apple and Tesla. And also the potential peace talks, which now are kind of questionable with the Russia-Ukraine war happening. Also, this pullback. So when I was saying bearish divergence on the 4-hour, bearish momentum, this is exactly what I'm talking about. It looks like a minuscule move, but it's really not for an index to pull back 2 to 1.5%. Depends on the time frame. But it's the beginning of this particular pullback on the intraday. So where are we now? We have to remember in the long term, if we switch to a weekly, okay, in the long term, it's still hesitating this price. You can see it's still just basically for 1 year, the price has been going sideways. But if we're focusing on the daily chart, it's still technically a daily potential uptrend. Actually, it is a daily uptrend because we have our high, low, high, low, high. So it just depends on, if you watch this volume, it's been slowly declining in this entire move. What's the next set of above average volume that we're going to get? So this particular upper trend line at the 340 USD range needs to hold. Definitely needs to hold. Okay, so if we just take a quick look intraday, because it's starting to upcross. We look at our 4-hour very quickly. We do have a golden cross to the upside. Our 1-hour, we did have this nice little bounce here at the end of the day, April 1st on Friday. However, it is still technically in the downtrend. So what I'm concerned about is on our 15-minute, we start to get a little bit of this almost potential upside down head and shoulders, which I'll be watching out for tomorrow. If we pull back, so we have to watch futures overnight, but this could potentially extend to the upside tomorrow. So that's something we want to watch out for. Just right off of our 200 EMA on this hourly chart. So I would not be surprised if that happens tomorrow. right around a pivot point as well. All right, let's move to S&P 500. SPY ETF, we'll just do a fresh new chart. Just move along here. So again, we had our double bottom, wonderful setup. The long setup, the double bottom. Now we broke through the resistance on the top side on this daily chart. The descending wedge breakout, which happens more often than not. But the pullback that I was talking about, the potential bearish pullback, is starting. And it has been happening, negative 2% down from the high of March 29. And the question is, because we have this 4-hour up cross, is, well, how deep are we going to go into the support level? Because you could go support all the way down to the average 440 US dollars. Or is it just going to stop now because we hit this 1 hour oversold? That's kind of the setup that we have. But it is still, if we use short-term EMAs, it's under that. So what we would need is, again, this type of potential 15-minute. It happened on all the indexes, all three of them. Even on the inside of the day, if you look very carefully on the 15-minute on the SPY, there was a literal upside down head and shoulders on the day. That's why somebody bought that at the end. They caught that. So what's the upside potential move? 0.57% to the upside, which will bring us our target to 455. Or if it goes double that target, it'd be about 1.28. So 1.28%. Let's get that second target up. Is 458. We're still playing support and resistance, so the resistance level is directly above. Maybe I'll use a yellow bar in that 454 range. The support level is just about that 450 range. So we're playing between these two levels, support and resistance. And there also is, if you want to draw a trend line, because you could see the pullback could happen just right hit this blue dot 452 before it extends to the upside. So I'll be watching for that tomorrow on the S&P 500 as well. Just a quick note, if someone's more on the investor side, if we do check our weekly chart on the candles, is there was a shooting star the last week. Okay, so I would be concerned about that. We need to see what happens in the next couple of days. If you look at the DIA, shooting star, which is technically our bearish pattern, so I would not be surprised if all of a sudden we fold over to the downside in the next couple of weeks for just because of the massive rally we had, right? Because a weekly higher low, we need this pull. We need the pullback for it to become normalized, okay, between supply and demand. Then you can also get like a weekly upside down head and shoulders, and then we're really going up, right? So it's same thing with Bitcoin as well. So just from experience, I know, okay, if it's going to pull back, as long as it doesn't break below 318 here on, for example, on QQQ and SPY, it doesn't break below 415, we're fine. There's a lot of space to pull back all the way down and still be in an uptrend long term. So just because we see red for a month, we have to understand the bigger picture. Or if we just see red right here for couple days, we understand we could pull back all the way down and still be fine. Retest the bottom side of this trend line to make sure this is real before we bounce to the upside. Definitely possible because we have earnings coming up in about 2 weeks from now. All right, let's do QQQ. We'll move on. Again, why am I doing NASDAQ? Why am I doing the indexes? Because it's very important to understand the aggregate of the market, not just the cherry picking the one chart or the one company and ignoring the rest of the world. It's more about, oh, no, let's just look at the entire index. Okay, so NASDAQ on our daily also had this daily double bottom, essentially. Okay, intraday, it was almost a double bottom, but on the daily, this is just recharting it like this, the descending wedge pattern, finding almost basically a dirty, I'm going to call it dirty double bottom, W pattern, or just support triple bottom somewhere down here. And we broke out, extended how much? 16%. It's a little bit overextended on some of these intraday, just for the past couple business days, trading days. So again, we did have this golden cross to the upside. That's beautiful. It just needs to hold above 352 and maintain bullish continuation to the upside. Pullbacks are normal. And this hourly looks like it's ready to go. It looks like it's ready to bounce to the upside. Again, zooming into our 15-minute, this was everywhere on Friday. The potential upside down head and shoulders. Let's get that target going on. 0.87% from the breakout would bring us up to 364. Sometimes I like to go double that target to 367. So these are the two bullish targets to the upside, 365 and 368. To the upside, we're still playing support or resistance. Immediate resistance above is 362, 362.65. Immediate support is 360.95 and 360.43. Just box that price in. Now box that price in. One could also argue it is a ascending triangle on a 15-minute, yes. But this is kind of post-market data. So I would not be surprised if we pull back and then dip buyers, intraday dip buyers trying to hold the 361 before it retests the upside. But again, just like I say in my Discord, is that any breaking fundamental news can reverse the charts and override things. So, you know, if there's anything bad that happens tomorrow, 6 o'clock in the morning, 9 o'clock in the morning, 8 a.m., 7 a.m., relating to the war or anything like that, or even a massive sell-off, then it's a different story. But this is the setup that we're playing. No setup and no indicator works 100% of the time. So same thing with our weekly is you could see here, okay, if it's going to be a trend change, we have some momentum on the upside. It's still, we still need to establish a higher low. Okay, because if it's going to go down like that, when markets reverse, it reverses up. But there's usually a dip on the way, multiple dips. Okay, so I'm watching out for that long term. Okay, those are the indexes. Let's jump right into the stocks. This is what we're going to do differently this time, is what are the top 10 largest stocks in the USA by market capitalization, the size. Let's just look at those. I call those the majors, meaning instead of cherry picking the smallest penny stock in the market or OTC or just something that's being pumped or shilled online, is let's look at what actually impacts the market, what has the power, what has the moves. Okay. It's Apple for number one. Let's look at Apple. Okay, let's rechart this. It's the biggest USA stock currently. And what happened? I mean, it's just playing support or resistance. It was a little bit nerve-wracking during this time, but some of the fear lows have subsided. But we have our resistance trend line to the top side. We have our support trend line to the bottom side. And look how many times this thing was tested. 1, 2, third time's a charm. The resistance, 1, basically 2. And then we had our third touch point. And it did get a little overextended. This is why I have the no FOMO, and we have the no FOMO mentality. Is if something's up here in the air, again, I always caution people is, maybe we don't want to long that. Why? Because there's so much room for this price to pull back on Apple stock. Yes, there's a hammer right here. We're staring at it right now. That this is a good sign. It's intraday support. But on the longer term this is kind of abnormal. This is almost like short squeeze. Almost like a Wall Street bets Reddit type of play. Right, because usually normal uptrend has the pullback, the red pullbacks. That's normal. This is not normal. Obviously, it's extraordinary times right now and what's happening globally. But you know, you look at that and you say, okay, this is kind of like a short squeeze / FOMO type of play. But the buying point, if somebody's long, I always tell people it's that old adage quote of saying buy low, sell high. So in this box, where would the low spot be? The low spot was down here. And it was not a pleasant buy, meaning it didn't feel good to buy it at the time. March 14, 15. There's a lot of fear in that market. People were tired. But that's the low, right? If we just chart this particular trend line was here right before the war started. The top trend line and this bottom trend line was somebody could draw it about 2 months ago. This is why I focus on longer term charts for the most part. Okay, but now that we've broken out to the top side here above the resistances, now this trend line and the support line right here at 170 needs to hold. On our weekly, there is a shooting star. This is not really good because on weekly, okay, the last time we had a shooting star, end of December, had a large pullback the week right after that. Next shooting star a couple weeks later, this is mid-February, is 3 weeks of red. Okay, but the past performance does not predict future results. It's just whenever you get a weekly shooting star, that's kind of not a good sign. So that's why I'm expecting over the next couple weeks, right before earnings, it might pull back. That's the expectation. Will it happen? We have to see. This week is crucial. The next 2 weeks are kind of crucial for a particular direction. But you could see here, right, even before I put the indicators up, is we went from a downtrend to an obvious uptrend. And is this about to turn to a head and shoulders? Maybe. So 1 hour, you might be able to see this on 4 hour. 4 hour, just watch out for this. Potential head and shoulders bearish reversal pattern would be 4% to downside, which would take us to 165 to downside. If it's 8% to downside, double the target, that's like 158. People are not going to be happy about that, but if it happens, it's going to happen. Fibonacci, just to double check the numbers, right there around that 50%, 618,786 target. So this is definitely possible. This bearish scenario is definitely possible. The first, you can see it's stopping at these support levels on the way down, but the next level down would be probably 168. If you lose the 50 EMA right here at like 171. But intraday though, just like the indexes, and because again Apple, it has a huge percentage of some of the indexes membership, is that it wants to reverse. Intraday traders are trying to hold this in reverse. The reason we had the upside down head and shoulders on the indexes is Apple, literally right here. So the same thing applies. It's going to be a battle between the intraday day traders, the swing traders, and then the investors. It's those three, basically those three time frames, or at least the two shorter time frames, fighting against each other. Do you want to note double bottom right here? That's one signal on the 15-minute price pattern that somebody was using to get that extra 1.24%. So 1% breakout move, so 1% would be 175, 2% would be 177, rounding it. So intraday, we could see a scenario where we go higher high on the intraday, but then over time, we need to see a breakout reversal out of this downtrend. So we did have the bearish reversal. We could see here that at the price did consolidate and we lost that support. So that's why I'm saying the bearish momentum was building. It happened at the end of the week, last week. So now there's a little bit of bullish momentum building for our swing trader. The longer term time frames, the 1 hour, 4 hour. Is it really low oversold? No. It's not. This is more of an intraday setup, right? Because what I just showed is you have an inside 5-minute, 15-minute upside down head and shoulders, but then the longer term time frame, the 4 hours, saying there might be a bearish downside head and shoulders. So that's why you have multiple time frames in play. And then if somebody ignores all that and you have a weekly shooting star, the investors are thinking, I might want to take some profit right now. So there's a lot of forces at play. Okay, where's my list? Let's look at number 2. Let's look at the number 2 biggest USA stock. It's Microsoft. Microsoft. Okay, some of these are going to look similar, but I love to focus on the majors. Why? Because we're not talking about extreme volatility or anything like that. The major stocks are a little bit more easy to predict, and hence I like trading them. So I'll go a little faster. It's similar. We had a double bottom on our. I already did SPY at the beginning. Welcome. So you probably have to catch the replay. But we had this double bottom, and the trend line resistance to the top side and the trend line support to the bottom side as well. This breakout. Might have to zoom in a little bit to see the price. But if we draw this kind of what I call this midterm trend line support, here is it's really fighting right at that spot. This kind of opening, broadening wedge. You can see we hit the top side so many times, and then we hit this bottom side, just pierced it. So now what remains to be seen tomorrow is, are we going to break up to the upside and stay inside of that, or is it actually going to just reject down? Microsoft, slightly different story. A lot of the indicators look the same. Okay, so it's kind of a similar analysis as Apple. I don't need to repeat it too much. It's just watch for the longer term support levels. If it breaks the upside, great. But if it doesn't, 303, 294, 286, those support to the downside, you want to watch out for those long term. Next one, Google. Okay, some of these are, because they're all tech stocks, it's going to look the same, but they're not exactly the same. That's why it's good to kind of do the analysis, because right here on Google, we have this enormous support level down here at 2522. So it's not just about the double bottom, it's a quadruple bottom. 1, 2, 3, 4, support, buy. No fear, buy. I mean, you have a stop loss, so less fear. Buy. Right, that was the setup. Now it hit this resistance level. This is going to be kind of a dirty trend line, but right here you can see it just bounced literally right off that. So now what is this thing turning into? Okay, almost like a descending triangle, but we had the breakout already. But still, it's there.